Hello traders, this is Dan Hussey from ImpulseTraders.com bringing you a special report on 4/21/2011 on the dollar and the S&P 500 and where we are in current setups. So I actually have up a weekly chart of the DXY, and this is back from 2000 highs around 121. Those highs happened right around the time of the tech crash, and then we since 2002 through 2008's stock market crash, I guess you could call it, or 2007 2008's crash, the dollar had been in decline, and basically starting this trend from the previous highs, we started a series of extensions that held once, that traded once, twice, 3 times, all the way down to target. Then same anchor, same anchor, new high, traded all the way down. You see how the extension trades down, fills the pullback, heads to the target, fills the pullback, heads to the target, fills the pullback here, and so the last time this traded was actually in 2005, in November of 2005, around the 91 level, and we sold off all the way down to the target of around 74.75. With that being said, same anchor, new low, keeping with this pattern. I'll make this 50% line here really big here, and let's make it purple so you can see exactly where it is. See this big purple line? Look how that held twice, tested resistance as we set up in this big daily A, B, C, D, E triangle Elliott wave pattern in some large wave 4. And if you count this on the way down, I count 1, 2, 1, 2, 3, 4, 5, and then we went in an extended fifth leg here. 1, 2, 3, 4, 5, and then started a large fourth wave consolidation for the 1, 2, 3, 4, and if you want to pick an all-time dollar low, it'll likely happen at some targets I'll give you in a moment. So obviously this 50% trend continuation extension level held at the 87s. We never were able to close on a monthly basis above it if this is a weekly chart. Not to mention, we never invalidated it that long at the 91 level, we can call it, which would be the 61.8. So with that being said, that alone brings up targets of 63 on the DXY. And every 50% pull from that low, we have failed to hold 50% pullback. The only time we actually traded a 50% pullback and actually held it was here in 2008. But nevertheless, it didn't hold the next time it was tested. All right, so this being a triangle brings up targets alone of lows around 67. That's 100% extension of the widest portion of the triangle from the E wave high. It comes in somewhere, right around 67. If you want to be conservative, those targets come in around 70, which would be our previous 2008 lows, 70.69s. I'm going to get rid of that triangle target for a moment, and now take us down to a daily chart, so we can just concentrate on really on this last piece of the trend here, or this piece of the puzzle here. Now you can definitely make an argument that from an Elliott wave standpoint, we have an A wave up, and then A, B, C, or WXY B wave. But the fact that we are now penetrating new lows here, particularly the new lows for not only 2010, 2011, but also going back to 2009, we have not been at this level in the dollar. Keep in mind, this level held as support once and was previously resistance at first attempt here back in 2008 before we had a massive breakout. So this level is highly important to a breakdown. keeping with the trend, inside that weekly trend, we have a daily trend. One moment here while I get rid of some rollover lines here so we can see this clearer. There we go. Alright, so the dollar lately has basically gone into free falling. Back in March, we at ImpulseTraders.com, we followed the break of this trend line, and it's twice tested as resistance and failure to hold was enough for us to say that the dollar trend is down until it is not. And we stopped fading trying to buy the dollar, which we did here and here, and started becoming net sellers of the dollar on that break. Okay, so the first extension level that held was from your June of 2009 low to new low extension level. This extension traded once before here in August of 2009, or 2010 rather. I apologize. That's August of 2010 low, or June 2010 low here in 622 to the August 9th low, or 8th low, 6th low. What candle is this? August 6th low. We held the 50% and 61.8% pullbacks and traded down to the extension target of 76.90. Same anchor, new low, staying with the same pattern that extension targets use. The Dixie was bought back up into the 80s, where it promptly reversed and started selling off. This move alone had a target which has yet to be achieved of 73.42. We're almost there with a low of 73.70s, but 73.42 is the target. Now extensions typically extend to their extension target. The extension target here, like we saw from this move, see how it goes down to the 61.8 target there of 76.90s of this move, is the 79.76 area. So we have a very high probability setup from the 80 short level to go to a 70 target, which is previous lows, breaking out of a triangle. From Elliott wave perspective, you need to go to all-time lows, and then that's not even coupling on the fact of a lot of other technicals. So within this daily trend now that we know is heading down to at least the 73.42 level, we had a series of shorts that have been moving from entry to target, entry to target, entry to target, same anchor high, well, actually, shouldn't say same anchor. Entry to target, so here goes down to 23%, and once more, entry to target. We have now blown out the targets, which means we are now moving in a series of extensions because we've blown through the target. And if we take this down to an hourly chart, I'm sorry, let's go back up to the daily just for a moment so we can put that last measured move up.